Hello, Estefania. Can you hear me okay?
Hello, Elias. Long and clear. Thanks for setting up this call. We need to finally see which of the three innovative startups we're going to invest our venture funds in today.
Exactly. To give a quick recap, we evaluate SolarPod, SkillBridge, and FreshLoop. We would agree to eliminate SolarPod early on because despite the low investment of 90,000, the 19 ROI over 2 years simply doesn't beat the other option. So let's focus on the final two. I started by presenting SkillBridge, the AI-powered talent matching platform.
Sound good?
The pros for SkillBridge are massive. It's a SaaS model, which means highly scalable recurring revenue. The target market of HR department and tech company is booming with the gig economy plus. The projected growth is an impressive 25% over 3 years. The main con is the initial investment required 110,000 for algorithm development, which is the highest capital requirement of the three. What do you think?
I see your point, and the ROI is definitely attractive, but let's look at the alternative Fresh Lab, the zero watts grocery subscription. The pros here are its strong alignment with current sustainability trends, which warrants good PR. The investment is much more reasonability at $85,000, and the ROI is a solid 20% in just 2.5 years. The con, however, is the logistical complexity. Managing local supply chains and the reasonably packing for urban families could easily eat into their profit margin initially.
That's a valid concern. FreeSloop definitely carries higher operation risk. Personally, I have a higher risk appetite, so I lean toward the text scalability of SkillBridge. However, since 110,000 is a large upfront cost. I want to negotiate the terms. If we go with SkillBridge, I propose we ask for a 15% equity stake to offset the higher capital.
I understand your concern about the upfront capital, Elias, but SkillBridge 3 years timeline is at our cash flow longer than Fresh Lab. Wishing to agree to invest in SkillBridge, but only if we negative the payment timeline. Instead of giving them the full 1,010 no 110,000 dollars. Now we should relax it in two tranches. 50% now for development and the remaining 15% only after they onboard their first 50 enterprise clients.
That's a very smart compromise. A milestone-based timeline reduces your final risk significantly. I can agree to that condition. Regarding the equity, if we use the trade system, the fund might put back on 15%. Will you be open to negotiate to uh,
12.
10% equity instead to ensure they accept the deal?
Yes, 20% equity is reality target and skill gives us a strong seat at the table. So we have a deal. We will invest in skill bridge.
Excellent. To summarize your final decision and justification for the investment committee, we are choosing Skillbridge because it's offered their highest ROI at 25% and targets a rapidly growing market. Furthermore, we negotiate a 12% equity stake and a milestone-based funding timeline. We successfully mitigate the high initial finance risk.
Perfectly safe. I'll draft the term sheet with DC conditional and send it over for you review to be tomorrow.
Thanks for the proxy negotiation. See you later.
You too, Elias. See you later. Bye.